Now let's talk about the new NIRSAL Microfinance Bank, which the Central Bank of Nigeria, the Bankers Committee and NIPOS are putting together. This program is already undergoing a number of works, and stakeholders are asking questions. Everyone wants to know more about it. And this is something also you need to take a pen and paper and take very good note of. Let's bring in Dr. Steve Ogidan, who is a national coordinating consultant at NIRSAL, and it's live here in Abuja studios for this very interesting conversation. Thank you very much. It's good to have you.
Thank you, sir.
Good morning. Hope you had a great weekend, sir.
Very well. Thank you very much.
Great. So in few 1 or 2 minutes, we want you to unpack this particular program for us in terms of the policies, the strategies. But first, a bit of a background into why this National Microfinance Bank is very important.
Thank you very much. National Microfinance Bank is very important for this economy because of 4 major reasons. Number one, there is limited access to finance for MSMEs and farmers, especially in the rural areas. And we know majority of Nigerians are in the rural areas. Secondly, the cost of fund by existing microfinance bank is very high. So government is desirous of the need to bring down this lending rate. And thirdly, the windows of opportunity for lending to MSMEs available within the central bank has not been used by the existing financial institution. And then there's limited number of financial institutions in rural areas. And given the activities of NIRSAL, especially in the rural areas, working with the farmers, there's a need to create this opportunity. And the Bankers Committee is coming in with funding, owning 50% of the bank. NIRSAL is owning 40%, and NIPOS is coming in with the legacy asset, which is the infrastructure. As we know, NIPOS has over 1,800 locations across the country. And so what we are doing is to leverage on the existing infrastructure of NIPOS, leverage on the technology NIRSAL has deployed, and the customer base that NIRSAL has been able to enroll in financial inclusion. And the central bank is desirous of increasing financial inclusion in Nigeria. That is why we have come.
Some of our viewers want to know what NIRSAL is all about.
NIRSAL is the Nigeria incentive-based risk-sharing system for agricultural lending. And what NIRSAL is doing is to de-risk agriculture.
Which is an agency of the central bank?
It's actually an institution fully owned by the Central Bank of Nigeria for the purpose of de-risking agriculture. NIRSAL is not a parastatal. It is a private sector-led institution owned by the Bankers Committee and the Central Bank of Nigeria. And what the Central Bank has done is to create the institution to be able to de-risk agriculture. And then NIRSAL is running as a PLC, a publicly quoted company, and all its activities are guided by the best practice of governance.
Okay, so NIRSAL here is representing the Central Bank of Nigeria under the new arrangement.
Under the new arrangement, NIRSAL is representing itself. Because NIRSAL has 40% of the bank, Central Bank cannot be a regulator and a player. All Central Bank is doing is to create an enabling environment for the bank to be able to operate effectively and supporting the infrastructure to drive financial inclusion. So NIRSAL is coming here with the enlistment of over 2 million farmers that we have in the grassroots, with the technology and with our project monitoring and reporting offices across the country. Whereas NIPOS is coming in with the locations and the legacy asset, and Bankers Committee is coming in with...
So if you look at our population and our agricultural population,
yes,
you think this will go a very long way to folks at the bottom of the pyramid when in terms of microcredit?
Precisely. Majority of Nigerians are living in the rural areas, and those are the people that have not been included financially.
And we have microfinance banks already.
Majority of these
hundreds of them.
Majority of the microfinance banks are operating in urban areas. Let me give you an example. Abuja has over 58 microfinance banks. A state like Yobe has only 1 microfinance bank. And when you go to rural area, look at Lagos. Lagos has more microfinance banks than the entire Northeast put together. Lagos State alone. So you discover that majority of these microfinance banks are still urban-based. So what NIRSAL is doing is to drive financial inclusion in the rural areas by making sure that deliberately these banks are located in the rural areas. For example, the branch in Abuja is located in Gwagwalada. So we are working to have a branch, a functioning branch of this microfinance bank, at least in each local government. So no area is excluded.
Why is it that we can get the existing microfinance banks work? And what to make this intervention?
Some of the existing microfinance, get me right, some of the existing microfinance banks are working. But again, microfinance is a game of number. If you don't have 10,000, 20,000, 25,000, 250,000, 1 million clients, you will not be sustainable. A microfinance bank with 250, 300 customers is wasting its time. And many of the existing microfinance banks, because of the operating environment, Because they are doing commercial bank at lower scale, they have lost the microfinance technology that will have driven financial inclusion. When you look at the successful microfinance bank, across Africa where we have worked, there is no successful microfinance bank that has less than 50,000 clients. 80% of microfinance banks in Nigeria have less than 5,000 clients. So if they don't have the number, then they will not, and you cannot get the number when you are remaining in urban area. You need to go to the rural area. That is what we are doing, going to the rural areas to enlist these clients, bring them into the financial inclusion bracket, and then give them opportunity, not only for lending.
So we're trying to bridge the gap here. So I want more details of the new framework.
Yes. The new framework is to create an opportunity for rural dwellers to be able to save, to be able to access credit. A major challenge again is that existing microfinance banks are asking for collateral. This bank is going to give loans to the rural farmers without collateral. Then the interest rate, the cost of fund is very low because the governor has been kind enough to peg the interest rate at 5%. So at 5%, people can do business profitably and they can access this fund at a faster speed, and then we are taking banking to the people in the rural area. So that is one thing we are going to do very differently. And we are going to employ people in those localities to serve their own people. Instead of having a central command, everything is being controlled from the capital. Majority of the microfinance bank, as we said before, they're located in the state capital. And the clients are not in the state capital, the farmers are in the grassroots. So we are going to the grassroots to take banking to them, to serve them in the language they understand. And that is what we are doing differently.
And the strategies here for the NIRSAL Microfinance Bank,
yes.
What does it really entail? Yes. 5%.
Our strategy is to have state capital branches as grade A branches. Then in each senatorial zone, we are going to have the grade B branches. And that is what we call the bricks and mortar branches. Then we now use agency to drive about 654 branches in all the local government for us to be very profitable. Because one, we are not running this bank on charity, and we are not running it on subsidy. It is an efficient run bank to be able to break even within the first 6 months of operation.
Where's the initial money coming from?
The initial money is coming from the Bankers Committee.
How much is that?
5 billion naira. The Bankers Committee has invested 5 billion naira, which is the shareholding fund of the bank, and NIRSAL is coming in with 40%.
So it's going to be the largest microfinance bank?
It's going to be the largest microfinance bank, but again, structured to serve the rural people. Our population are in the rural area. They are not in the city. And that is why the existing microfinance bank are not getting traction, because urban people, they have their mentality. Agriculture is the main base of the economy. If you are not serving farmers, you have excluded yourself with over 60%. If you are not serving rural area, you have excluded yourself by not serving as much as 65% of the population. So if the population is rural-based and the farming families are more in the enterprises and you are not serving them, you've cut yourself out. The people in the urban areas are limited. And then most of them are salary earners. And salary earners, as we tell the microfinance bank, is not a growth market. The growth market is the MSMEs. It is the rural area. It is in the farming community. And that is what this bank is going to serve.
So the NIRSAL Microfinance Bank is going to end up killing a number of microfinance banks that are currently on the lifeline?
No. What we have done in NIRSAL Microfinance Bank is to turn competitors to collaborators. There is no microfinance bank that will die because NIRSAL Microfinance Bank has come to the scene. What we are going to do is to build their capacity and let them come and take agency of the bank to be able to work in rural areas. But what we are not going to do is for them to take the agency of the bank and run it in urban area. It's not going to work. The target and the policy focus is to drive financial inclusion in the rural area. The policy focus is to lend to agric at a very low cost. So if they are ready to serve in those environments, in those climates, they are not going to die. We have turned the competitors into collaborators, and we are expanding and building their capacity, given the new policy directive of the central bank, especially within the capitalization.
So some of the microfinance banks currently licensed could become agency?
Yes. Majority of them will become agents of the bank because we are not going to crowd them out. We are going to build their capacity. They may even apply to the bank to get on lending fund, wholesale fund. But this fund must be channeled to the farmers, it must be channeled to the grassroots in the rural areas, and then they must be able to lend at a lower rate, because that is the policy directive of the central bank. We cannot afford to drive this economy if the lending rate is 40–60% per annum. Some of the microfinance banks are charging as high as that. And you don't blame them. The operating environment in which they put themselves is very, very difficult. They operate in urban areas, you must drive, you must have generator. Many of them are behaving like commercial banks, they drive cars, then again the cost of operation, and then they serve limited number of clients. If you are serving 5,000 people Even if you charge each of them 100,000, it's not enough to cost. If you 100 naira, it's not enough to cover your cost. But when you are serving thousands, you are serving millions, no matter the little you are getting, you'll be able to cover your cost. And then you
will I be able to use this 5% fund to do refinancing if I'm doing SMEs in the rural area?
Because the lending rate is low, and because you are getting it without collateral, and the turnaround time is very fast, you can use it to drive your MSME. And another thing we have not said is that if you are getting this fund and you are going to buy equipment, we are not going to give you the cash. We are going to pay this money to the manufacturers of the equipment to supply the equipment. And again, this bank is going to do a whole lot of business development activities, training the entrepreneurs, building their capacity to be able to run their enterprises. Because a major gap in the MSME sector is capacity, not funding.
But then, will those who want to do refinancing be allowed?
Of course, they will be allowed.
But that will mean we'll go back to the same
No. It's not going back to the same issue.
Maybe we should be for those who want to do greenfield projects.
No, we are going to do greenfield projects. We are going to do micro, we are going to do small, we are going to do medium. And the structure of the funding is going to be divided, because the capacity of somebody that is going to do micro enterprise is different from the capacity of the person that is going to do small. It's different from the capacity of the person that's going to do medium. And if somebody is going to agricultural processing that is going to take, for example, 10 million naira, it needs a bigger capacity. So we need to be able to structure. We have different products for different categories of people. Yes.
Okay. In terms of the central bank is in it as a regulator, doesn't want to run this for profit?
Central bank is interested.
How does it become profitable?
Central bank is interested in financial inclusion. The bankers committee is interested in going down the market to serve micro enterprises which they are not serving. NIRSAL is interested in it because our farmers are involved. They want to extend credit to the farmers. And we are working in the rural areas. We already have about 2 million farmers that are already in the financial inclusion bracket, but they need access to credit. So you see, if microfinance is not sustainable, it's going to die. And that is the bane of the past products and activities. And this is what we are driving, that, look, we need to cut down our costs as much as possible. We need to employ people that have the mentality of serving the rural farmers. We need to reduce our cost as much as possible. We are not paying rent because NIPOS is coming in with the building, with the structures. And when we have the agents are going to provide their staff, and they're going to provide the physical structure for the operation of
But beyond some of the existing microfinance bank, who else can do agency banking under the new National Microfinance Bank?
Under the central bank agency model, a petrol station can take an agency. A cooperative, MFI, can take an agency. A supermarket that is having the rural area can take an agency. All they need to do is to abide by the rules, terms and conditions, and then they will be able to serve the people. There are some controls that have been put in place that will make them not to be able to divert the fund. They are going to recover our fund. They are going to collect deposits, and they are going to do BVN enrollment, which is a major issue, bringing more people into the financial bracket.
I'm interested in how we use financial inclusion and technology to drive this moving forward. Let's stand by everyone with Dr. Steve Ogidan of NIRSAL for more explanations and insights into how this new NIRSAL Microfinance Bank will work as soon as it gets unveiled. We're back in 2.